What's up, everyone, and welcome to the Trade with Logic podcast. Your host for today will be Matty and Shahan, which is a little different from our regular podcasts. We'll be discussing backtesting, which is also known as stress testing, and more specifically, the problems with manually backtesting a trading strategy. Do you want to introduce yourself a bit, Shahan?
So I'm the CTO of Logikfx. I've been developing the AI behind LS and all the software tools that are available on Logikfx. So I have a lot of experience backtesting multiple different bots and different strategies, and
Mm.
I've noticed quite a few things that people have overlooked.
Yep. So today we'll basically be picking at his brain of like the technology side and how people are making these mistakes. And if you don't know what backtesting is, it's basically seeing how well your trading system will have performed in the past with historic data. And as Shahan mentioned, if it's done manually, it's literally full of loads of flaws, which retail traders will make. They'll make these mistakes, which then gives these unrealistic expectations. So we'll just jump straight into it. What's your thoughts on backtesting then, Shahan?
So my thoughts are, first of all, when you're developing a strategy,
Mm-hmm.
if you develop it based on backtesting, it comes with many flaws. One of those flaws is overfitting.
Okay.
So going further into what overfitting means, it's basically it's a statistical thing where you analyze too closely and you try to get your data to match your what you're backtesting on. So
Okay.
for example, let's say you're building a strategy. You notice a certain type of candlestick is profitable on, say, Euro USD on the
Mm-hmm.
15-minute chart from 2018 to 2019. So you develop your entire strategy around that candlestick. Now, the problem is it will work for that 2018 to 2019 period, but it will fail in other periods because you're building it just for that period.
Mm.
Going, so would you like me to go further into it? It's
Yeah. So what you're saying is basically it will it will work in the past in that period of time, but when you're trying to apply it live, it's gonna start getting iffy, right?
Yes. So it's a common problem in AI development as well. When people develop AIs,
Mm.
they have to train it on a certain set of data. The problem is, you train it on a certain set of data and then you test it to see if it's overfitted or not.
Okay.
When retail traders build their backtesting strategies, they do it with no plan. So they'll feel their way through random time frames and random charts without any plan going into it. So they'll build their strategy on 2018 to 2019 Euro USD. They'll see that it's profitable and believe they have a working strategy.
Mm. So
Now, yes, so now they test it on a live situation and they'll notice it doesn't match their back-tested results. So that comes with a whole variety of issues as well. But say they were doing it perfectly, they're implementing the strategy exactly as how they back-tested it.
mm-hmm.
Even in that scenario, most likely they have overfitted it.
Mm.
So Euro USD would have worked, but GBP USD would have failed on that same training. What they should
Okay.
have done is developed their strategy from 2018 to 2019 Euro USD and then tested their strategy on GBP USD 2018 to 2019. If it worked on both without having to change it again on GBP USD, then they have something that's workable.
Mm. So you're saying they make the mistake of basically only testing their strategy on a limited amount of assets, right? So Euro USD, for example, they're testing their little candlestick strategy out, and they're then trying to apply that to every single asset that's out there, right? Any price chart asset, they think it'll work.
Yes. So that's exactly what happens. They
Hmm.
train it on something and they believe that their trained results are the actual results that they can expect, when really it's not the trained results that are the actual, it's the tested results that are.
Mm.
Now, it comes with another issue. So, say they built their strategy on Euro USD 2018 to 2019, and then they tested it on GBP USD, but they found that the tests had didn't give them the results they wanted. So they tweaked their strategy just by a tiny bit, just to make the results a little better.
Mm.
Now the problem is that GBP USD is no longer a test set because it's been used to train the strategy.
I see. So basically, they're testing it on one asset. It works great. They're trying it on another one. Okay, it's not working as I thought. I'm going to change my parameters a little. I'm going to let this candlestick be a shooting star now instead of a bearish engulfing, something like that. Yeah.
Yes, that's exactly it. So they'll be
And
like, ah, I don't look for these shooting stars on this one. I'll wait for certain more specific setups that work a little better on GBP USD than Euro USD.
yeah, so essentially they're just constantly changing their parameters to fit every single thing, which doesn't work in live scenarios, right?
Yes, because they're overfitted for that past data. So a live
Mm.
scenario would be a completely fresh test set that they have no knowledge of, so they can't tweak their strategy until it's either losing or winning.
Mm-hmm. Is that the only thing? So there's overfitting. There's also like other factors, isn't there? Like so with manual backtesting, you'll probably find that yeah, my backtest results are great, but when it comes to live testing, live applying your strategy, there's other factors, isn't there? Like psychology.
Yes, so one of the main factors is time. People underestimate how time works in a backtest. So
Okay.
when you're backtesting, you skip an hour or two in advance, yeah?
Mm-hmm.
You'll be looking at a chart and be like, okay, my setup's not here. I'll skip 4 5 hours, 6 7 hours until my setup appears.
Mm.
But they don't factor in the times people go to sleep. Your setups could be appearing when you'd usually be asleep. They don't factor in when people are not at their desktop or in front of a trading screen.
Mm.
They don't factor in eating, relaxing, and all those other time commitments that you have throughout your day. So a lot of your setups, you wouldn't even have a chance of even seeing them throughout your day.
And
At the
that's on a backtest result, right?
Yes, on a backtested result. Now, say you factor that in into your backtest. You're like, okay, I won't trade from your regular sleeping times to your regular eating times. You have your
Mm.
schedule all planned out, and you're like, I won't look for setups in those periods of times. Now, not many people do that already when they backtest. They
Mm-hmm.
assume they can be up 24 hours with laser focus for 24 hours
True.
every day for the entire year, which is not plausible.
Mm. So you're saying that when they're backtesting, let's say they can only trade between periods of like 9 a.m. to 9 p.m. or sorry, well, that's 12 hours. Let's say like 3 p.m. to 9 p.m. They're not accounting for that in the backtest, right? So the results in the backtest are actually not indicative of what they can actually do in a live scenario.
Yep, it's never mimicked correctly.
Mm.
So if they were strictly managing, well, backtesting their strategy, they
Yeah.
would have to factor in those time commitments as they are a real problem for manual backtesters.
Mm.
Also, skipping 4 5 hours ahead, you still have in a backtest scenario that would take you a couple of minutes. So your focus is still very heightened. Whereas
Mm.
if you'd really waited out 4 5 hours, boredom and such would kick in and it'd lower your focus to really low levels, and you may be more willing to take worse setups, lower probability setups just to get a trade in or to alleviate the boredom.
I see. So like you don't have the patience anymore in it. You The lack of patience from having to wait extended periods of time that you can't do in live scenarios causes you to have those little like psychological slip ups, right?
Yes, that's correct. You're like, can you imagine waiting 4 5 hours and being super focused the entire time, it's not going to happen. It's too taxing for a long period of trading because it's not sustainable.
It goes into that point we discussed last week with Marcus with that ego depletion. You know, you're not going to have the mental like capacity, you know, the willpower to continuously stare at charts to find opportunities like you would in backtesting, and it's just gonna, you know, rot away at your decision making eventually, especially if you've just had a whole day of staring at charts. And even in longer time frames, like if people are trading longer time frames, it's a little different, isn't it? They have to wait longer periods of time for their setups, so they don't always have to look at the screen, only like every few days or whatever.
Yep, their
But
margin for time error is a lot higher. So if you're trading like a 5 minute chart, your opportunity may appear in like a 20-minute period throughout the entire day,
mm,
and you have to be on for that exact 20-minute period in that day. Whereas if you're trading an hourly, 4 hourly, that time period you get to take that opportunity is a lot higher. For
mm,
example, if you're trading a daily chart and you hold a trade for a couple of months or a month or so, you would only actually have to look at a chart every other day or like every other at
mm-hmm.
the start of every week, which is very easy to do because you can plan that out a lot better.
Yeah, and it goes into that problem with um kind of like the day trade, like the scalping mentality, right? It's like near impossible for a human to do it manually because you can't be on 12, 24 hours a day. But there's going to be the people you're competing at are bots. You know, they're constantly running 24 hours.
Yeah, their focus doesn't deplete. A
Mm-hmm.
bot would always be at maximum focus because it never loses it, unlike a human. Whereas your focus goes down, you'll have periods where you're
Mm.
more likely to make mistakes. It happens in everything. You won't always
Yes.
be at peak form.
Yes. I think that's really good to cover. So, since that's a problem with like manual backtesting in general, what do you think normal retail traders could do? You know, like affordably.
So, one of the first things they should do is when building a strategy based off backtested results, they should plan out exactly what set of data they should build their strategy around. So, for example, they list out all of their training data. They're like 2017 to 2019 Euro USD is going to be my training data. 2017 to 2019 AUD USD is also going to be my training data.
Mm.
2019 onwards for all the pairs are going to be my test data. I'm not allowed to tweak my strategies on test data. It's just to see if my strategy worked.
Okay.
If my strategy is not working from training data to test data, I have to fundamentally change something in my strategy. But
Mm.
I can't change it based on what I've learned from my test data. I'd have to change it based on what I'm learning from my training data. So it's a little confusing, but these types of rules are necessary to build a strategy that's not biased towards a specific set of data.
Mm. So when you're saying test data versus was it stress data,
Test data versus training data.
training data, that was it. Can you fully clarify that? Because I think people get confused on that.
Okay, so training data is where you build your strategy around. So like you can do your optimizations, you can look for certain setups in that training data.
Mm.
Test
Okay.
data is whatever strategy you've built on the training data, it's not allowed to be changed anymore, and you play it through the entire test data to see what your strategy would actually give you.
I see. I see. So what you're saying is you train it on, let's say, Euro USD. That's your training data, right? Let's say you're training trend lines or support and resistance. Let's say support and resistance, make it easy. You're trading that price will go up at support and go down at resistance on Euro USD on Euro USD, and then on the test data, you can now no longer change how your strategy works because you've already tested it on your USD, right? And then you apply it to this test data. You apply your strategy to this test data and see how it performs. That's what you're saying. Yeah, I think that makes it a little bit more clear for people listening.
Okay, so it is a little confusing. It's
Yeah.
because people will think, why don't I change my strategy on my test data to make it better?
Yeah, it's confusing, but it's right. It's people oversimplify it, don't they? Whereas actually, the underlying concept of stress testing,
Yeah,
they're
it,
missing out
it'd
on these
work.
factors.
So to give you an example, if you ran a bot, so I've optimized a bunch of bots using genetic algorithms, and just simple bots that I could change the stop loss, take profits on. I could optimize a bot for Euro USD's 2018 2019 to give me 1,000% profit
Mm.
because it perfectly trade that Euro USD in that period of time because it already knows what happens.
Mm.
So it play it through, it get 1,000% profit. Now that same bot from 2019 to current date, which is halfway through 2019, it would fail. It'd probably give you a minus
Mm.
return. Now, how could 1,000% profit go to minus? It's because of the overfitting of it.
Mm.
It it worked specifically for the 2018 to 2019 period of Euro USD. Now then I could over optimize it again to the 2019 to current one and get another 1,000% or 500% profit. But it wouldn't solve the problem. It wouldn't work in a live situation where additional data is added in.
Mm. That makes sense. So the overfitting concept basically saying it only works really well in this time period because of these certain conditions, and then these certain conditions will never repeat themselves in the future, right? Because for those conditions to be exactly the same, it has to have the exact amount of traders, the exact amount of liquidity in the market, the exact same news. What if Trump just randomly says something about tariffs, then it completely changes the condition of the market, right? And those overfitted, trained results of your strategy are no longer applicable. They'll
Yes,
just
it's
fail.
built around that unique set.
Mm.
Now, if you've optimized it around that unique set as well, it'd work really well for that unique set, but it wouldn't necessarily work for other data. So like
Yeah, I think
current
that makes
live
sense.
results.
That's really good. So just to conclude it, what do you think are the main points from the podcast that they could take away about manual backtesting and problems in backtesting in general?
Uh, First point, build a training set and build a test set. Only optimize and tweak your strategy or build rules for your strategy on the training set. If you want to see your strategy's performance, then you'd check it against the test set, but never tweak your strategy around the test set. Otherwise, that test set is no longer a test set, it's a training set.
Mm.
Then, the second one, always factor in your time commitments when backtesting. If you're backtesting a shorter time frame strategy, you have to always factor in whether you'd be available at those times. If it's inconsistent times, most likely you're going to not be available for those periods. If it requires intense focus, your strategy probably would not work in a live situation.
Mm.
Factor in for low focus, extended opportunities where it gives you large windows of entry, and those are the general points.
Yeah. Yeah, I think that concludes it pretty well. You got anything else to say, or?
There are other problems with backtesting as well, but these few are the main ones that I'd like to list.
Mm. Yeah, we'll probably discuss them in maybe a future podcast. Have a more specific backtesting discussion, maybe on like the psychological errors again. We discussed it briefly last week, but we can go over some further topics.
The psychological errors are a lot. There's a lot of them. So,
Yeah.
for example, here we talked about focus and the depletion of focus or ego. But there's a lot more. There's like the emotions. Like, say this year you're emotionally stable, whereas a bunch of things could happen in your real life that would change your emotional state, and you can't
Mm.
account for that in your backtest. You can
True.
always assume that you'd be perfectly rational, but humans are not perfectly rational.
Mm. And that's the benefit of automated backtests, right?
Yes, there are problems with automated backtests as well if you don't follow certain rules,
Mm.
but it
Yeah.
is a more accurate way to gauge how well a certain system works.
A certain system with fixed parameters, right? Ones that can't be affected by discretion of a human.
Yes, but there is ways to code in discretion as well. We could talk about that in a subsequent podcast.
Yeah, I think it concludes it pretty well. We'll probably end it there then. So, thanks for listening to this podcast. It's a little different from the regular, but it's a little insight on the automation side and backtesting in general. And hope you enjoyed it.
Yep,
You know,
thank you.
yep, thanks for listening. Please remember to subscribe to our YouTube, and we're also on Spotify, so you can actually listen on the go now, which is pretty cool, in the car. And follow our Instagram and Facebook pages. You might find something interesting. We have, motivational posts, some memes. But yeah, thanks for listening. See you later.